The worst of selling pressure is behind us, Tom Lee.
Welcome. It's good to see you.
Great to see you, Scott.
So I look at your notes today, and you suggest the worst is behind us. What makes you think that?
Well, I think the thing that we're watching is the VIX spike to 60 on Monday, which is the third highest reading ever, and the VIX futures curve inverted, which was the steepest inversion since the pre-pandemic times. Both are starting to normalize. I think the VIX, as it closes below 20, and it hasn't closed yet, and as that VIX futures term structure uninverts, that tells us the worst of the panic is behind us. I don't think it means we won't have ripple effects, because we know there's some trapped bulls, and there's still some nervousness around Iran and how much of this yen carry trade has to unwind. But I think the worst of the selling pressure is behind us.
How do we know that we had just a growth?
I mean, to be frank, I wouldn't expect Tom Lee to say anything different. I wouldn't, man. I would not expect him to say anything different.
Scare, and not something more dramatic to come, Tom. Never mind the unwind of the carry trade, and no one really knows whether that's over either. But when you think about those two events, what does it make you think about where we could go moving forward?
Well, I think investors, when it comes to the growth scare side, have something they can check every week, which is weekly jobless claims, because that's what was a positive surprise on Thursday, and a lot of it came from Texas. Texas had a big drop in weekly claims week over week. The fact that markets reacted so positively Thursday to that jobless claims number puts me in a camp that that's one of the big drivers, because we had a better than expected claims number and then the market popped. I think the growth scare is what's on investors' minds, and next Thursday, they'll get another weekly claims number, and if that's also equally improving or stable, I think it's going to give people a lot more conviction.
What about the unwind of the carry trade? I mean, there's no real tell as to whether that's run its course, and that seems to be, the obvious catalyst at the beginning of the week for positioning being well offsides, and it just needed to correct itself. Has it finished?
Scott, that's a great question. Nobody knows how big that carry trade could be. I think there is a large insurance industry participation in that, and I did speak to some insurance executives this past week. As their view is, there's a lot of financial institutions that actually implemented this trade, but if it unwinds in an orderly way, it's not disruptive. It's just that if you have weeks or days like Monday or last week, the end of last week, that's very disorderly, and that gets very expensive, because these insurance companies have to take off these hedges, and then they suddenly have unhedged carry trades.
Well, I just want to continue this. You suggest, if it unwinds in a messy way, there's no if. I mean, we saw at least the first reverberations from that unwind, and that was anything but orderly. What if there really is more of that to come, Tom?
Scott, there may be more of it. I think one thing that is been messy is the currency hedges, because these currency hedges were built for what you'd call like 1 percentile events, 99 percentile standard deviation. So a bigger move than that is what makes these hedges so expensive. They just let them expire. I think central banks can manage currencies within a 1 standard deviation band. So I think it's still important to watch currencies, but if we're staying in stable and predictable ranges, it can be a orderly unwind. But yeah, Scott, that's an uncertainty, just like the Middle East is an uncertainty as well. But markets climb a wall of worry.
Yeah. What do you make of how this week began? Not with necessarily the market upset, but So
let's say the market does sell off. What do you do in that sort of situation, right? Take advantage of great deals in the market. I mean, there's a long list of stocks that are having a lot of trouble. So here's my third quarter possible buys watch list. I mean, Celsius is looking juicy over this next few months as a buy. Estee Lauder's looking juicy for the next few months as a buy. Wynn Resorts, same exact thing, right? If you have any sort of longer term mindset, I mean, there's a lot of stocks that are great deals that will be money makers over the next 3 to 5 years, over the next 3 to 5 months. I'm not convinced of that, right? But over the next 3 to 5 years, there's just a long list of great opportunities. Keep in mind, this is just some of the best opportunities I find in the market right now. But keep in mind, this isn't even all the opportunities. There's more than this. There's more than this out there, folks. So, yeah, that's what you do. If we do have any more sell-off. People freak out over the carry trade.
Commentary around it, whether it was Jeremy Siegel of the Wharton School suggesting the Fed needs to come out and do...
Wait, are you talking about the Professor Jeremy Siegel?
75 basis point cut in an emergency way. Of course, he walked that back with our own Jeff Cox yesterday evening. Ron and Sana at the beginning of the week suggesting the Fed needs to come out and say something that essentially we've got your back from a liquidity standpoint. Do they need to do something before September's meeting?
Scott, I think both comments from both Ron and Jeremy Siegel are actually valid, but to me, what it speaks of is I think the markets and I think economists are no longer willing to deal with data dependence. I think they want a Fed that's more forward-looking because that makes them comfortable the Fed could respond if conditions deteriorate. I think that's the kind of language I'd like to see disappear is we're data dependent, so that by necessity they're going to be very late. I think it's actually encouraging to see this sort of pushback.
Yeah, that's fair. I wish I would have asked him about the small cap call, 50% this year, baby. I'm still waiting on that. Let's go, baby. How would you like access to all my best course curriculums? My Becoming Master of the Stock Market course, my Stock Market Investing Mastery course, my Stock Options Mastery course, my Millionaire Playbook. How would you like access to all my best courses, as well as the ability to have access to my 6 and 7 figure plus Discord community where we're constantly keeping in touch with each other, talking about what's going on in the market? How would you like exclusive weekly videos from me? How would you like the ability to see what stocks I'm buying and selling in my $2 million plus Fidelity account? If that all sounds pretty interesting to you, apply to join my private group. That is going to be linked in the description area down there. You can click on that, fill out an application, and go ahead, hop on a call with Andre. Andre will walk you through the whole process. He'll walk you through the whole group, and you can go ahead and join us in there. Once again, the link for that is in the description area. So, here we go. Starbucks announced Tuesday that it's replacing their CEO with the Chipotle CEO, Mr. Taco Bell, as the coffee chain tries to reverse a sales slump, sending stock soaring more than 20%. Chipotle stock obviously down big. We spoke about that. Now, this is going to be effective very, very soon here. The old Starbucks CEO is basically out now. And then as far as the Chipotle CEO, he's leaving at the end of this month, essentially. Now, the other gentleman took over as chief executive in March of 2023. And since that time, the stock's done very, very poorly. Very, very poorly. Now, Howard Schultz, the big dog at Starbucks over time, really the guy who built the company, he's made a few mistakes over the years of essentially hiring a CEO. The new CEO does really bad, and then he would have to come back. Or now in this situation, they're bringing in Mr. Taco Bell to run the show, so now he doesn't have to come back. So he doesn't have the best... He doesn't have the best decision-making skills when it comes to hiring a CEO, I'll say that. He's done a phenomenal job building Starbucks, but when it comes to picking CEOs, he has a 100% fail rate in that, unfortunately. Now, Elliott Management took a big stake in Starbucks. So as far as are they happy with this? Listen, they're very happy with this. Elliott's extremely happy with this move. Listen, Mr. Taco Bell, here's the bottom line with you got to understand with Mr. Taco Bell. Mr. Taco Bell is absolutely phenomenal for a stock price. He understands how to bring up margins, and he understands how to get the most kind of juice squeezed out of the lemon, okay? Now, with Chipotle, he was given a Ferrari. Let's just call it what it is. When he came into that company in 2018, he was given the keys to a Ferrari. I mean, Chipotle is the most exciting, innovative, restaurant-related concept we had seen in the United States of America, honestly, in decades, right? Absolutely, he was given the keys to a Ferrari. He got the keys to a company that the food was so good for so long that it built a cult-like following. I mean, people like myself that were going to Chipotle back in like 2010, 2012, 2014, we built that brand into something that was so successful because the food quality was so good. So he got keys to this Ferrari that had this, incredible potential. And what he did is he took that Ferrari and he drove it the fastest it could possibly go, right? But the issue is he never changed the oil in that Ferrari or did anything. And so what happened over time is the Chipotle standard got lower and lower year after year after year until today, which it's incredible. I went to Chipotle a few nights because I just really wanted to see, like, is it gotten any better since last time I went a few months ago? No. It got even worse. I mean, it's just incredible how the fall off of Chipotle in terms of service levels, quality of employees, and food standards. It's shocking to see how bad it's gotten there. But the moral of the story is he's phenomenal for stock price, right? Now, is it phenomenal for a company for the long term? I don't think so. Not in my opinion at all. But for a 3-5 year span, it can be very, very good. So him coming into Buc-ee's, and one of the other jokes I made is, the good news with Bucks is they don't have any food standards at Starbucks. There's no such thing as food standards at Starbucks. So I don't really see there being a way he could bring down the food quality standards at Starbucks, okay? So moral of the story is, Wall Street has a lot of respect for Mr. Taco Bell, and they should, because he's done a heck of a job at Chipotle in regards to getting the stock price significantly higher. I believe he is a leader Starbucks needs for this pivotal moment in its history. He has my respect and full support, says Howard Schultz. Okay. Now, during Mr. Taco Bell's tenure at Chipotle, the stock did absolutely phenomenal. We all know that, right? Now, you have to ask yourself a very important question here. Very important question. And that question is, why is a Chipotle CEO leaving Chipotle, going to Starbucks? Why? Think about this for a moment. Chipotle's supposed to have all this growth in future years. Chipotle's been a stock that has performed tremendously. Meanwhile, Starbucks is seen as saturated, mature company with not much growth. Why would a guy like this leave Chipotle and go over to Starbucks? Right? Is it out of the goodness of his heart, Mr. Taco Bell's? Because like, Starbucks needs help. Let me go help them. I don't think so, right? So why is he doing that? There's really only two possible outcomes here. One possible outcome is he's looking at a situation at Chipotle and he's not liking what he sees. He sees a company that is going to have some really rough comp store sales over the next year or two, and he's going to be looking at a stock price that could be crashing, right? And he doesn't want to be around for that because that's going to be a whole mess. Then they're going to have to bottom things out. Then they're going to have to bring it back, right? That could be one potential. The other potential is he believes he's going to make way more money at Starbucks. And the way he would make way more money is, let's say he believes Chipotle stock's not going to really move much over the next couple of years, so his stock options aren't going to do very well. Meanwhile, he's looking at Starbucks, and he's like, I could get a lot of stock options there, and I think I can bring that stock to $150 level, $170 level, something like that, so we can make a fortune in regards to stock. That's the only reason. He's not doing this move out of the goodness of his heart. It's got to be a situation. There's no other way you can justify it. Like just run it, run the scenarios in your head, put yourself in his position, and you're going to find there's no other reason other than that. If he really thought Chipotle was going to have this massive growth opportunity over the next few years and the stock was going to boom, he would not leave Chipotle. It does not make sense, right? Chipotle, at least over the past few years, it's starting to fall apart very quickly here, but at least over the past few years, has been more respected than Starbucks. So you wouldn't go down a level, right? You wouldn't go down a level. You're only going to go to a Starbucks if you think you're going to make way more money on that, right? That's it. So I don't think this bodes well at all for Chipotle. I do think it bodes decent for Starbucks, though. I think there's a pretty high probability he'll do a pretty decent job at Starbucks. Do I expect the stock to go up 700% over the next few years? No. Because the difference with... He's not being given the keys to a Ferrari. He's getting the keys given to a minivan, okay? And the minivan, it runs great, and, it does its thing. It does its job. It takes the kids to soccer practice and back and to school and back, right? Does its job. But this is no Chipotle. This is no Ferrari, okay? And so my opinion is, I think Mr. Taco Bell's making the right decision. I think Starbucks is making the right decision, and I think Chipotle's screwed. I really do. I think they're in a really tough spot here. The fact that that man's out and he's leaving, he's dude didn't get this far by luck. I can tell you that. He didn't get this far by luck. So there's some problems there. Let's jump into these videos and react.
The CEO, Laxman Narasimhan, with Chipotle's Brian Niccol, and joining us this morning with his reaction is Evercore ISI's David Palmer. For now, at least, still has a hold and an $80 target. David, good to see you again.
Thanks, Carl. Big news.
I'm looking at your note this morning. You argue that it's great, but reclaiming what you call the premium brand is going to be trickier than turning around Chipotle.
Well, it's going to be interesting to watch
Listen, he didn't turn around Chipotle. Chipotle had a health matter, okay? And it hurt their comp store sales for a year. He got given the keys back to that Ferrari at a perfect time. And remember, Chipotle's food quality and service levels were so high back in those days that they were able to get through that whole E. coli situation, which was pretty amazing because they had such a cult-like following. So when I look at that, I don't think he turned Chipotle around. Chipotle was already a beast. They were just going through a tough health situation there. They got out to the other side because of their cult-like following, and then they went from there, right?
steps. I mean, clearly, Starbucks has a brand momentum problem in the U.S. The recent trends have been down. Same-store sales-wise, there's people that have talked about doing things like spinning off China, but this is really a U.S. brand turnaround challenge. The good news is that Brian is the guy. He seems like the one person that has this omni-channel background, operations, marketing, CRM or customer relationship management, and he brings all of those tools to Starbucks. Clearly, this is a premium brand, and it's not one where you have this food value advantage like Chipotle did, but he seems like the guy for the job. And one big thing is you have Howard, the founder, that's still out there. You needed somebody with a gravitas to essentially make this his own company and attract talent to join him on this brand turnaround.
So you're calling Niccol the one restaurant executive who has the gravitas to do exactly that. Why not re-rate?
Well, we'll right now we're going through calls with the companies in both cases. So everything right now is under review in terms of how we view this company, how we view the earnings opportunity. I think everyone right now is grappling with that. And so we have a lot of questions, and we'll be talking to both companies.
I mean, the move today is pretty big. I just have a question about investor expectations and where they are relative to what we can actually expect as far as a turnaround. It reminds me of when Mary Dillon, the former Ulta CEO, was appointed CEO of Foot Locker, and that stock went up more than 20%. She was a great CEO, and this is nothing against Mary, but then it was, not a quick road to recovery on the earnings front in terms of a turnaround for Foot Locker. So what's realistic to expect after a move like this?
True.
The old Starbucks used to talk about an EBIT margin of something like 15% being realistic. Right now, the street numbers are more like 16.5% margins expectation for fiscal 25. At the higher number, would be, if that's in play, that would be high teens earnings upside from where the street is over time. The valuation's in the low 20s. I think some people are going to be thinking that this can go back to its old rating in that high 20s at least type valuation. That's where the dreams are going to rest. But you bring up a great point. This is not going to be necessarily easy. What makes Starbucks special is that human connection, that premium brand positioning. The baristas have to be energized. Clearly, they've had some union problems. Clearly, they've had a lot of new products that haven't worked. They need to rediscover what the core is, solve these operational problems in a way that re-engages their baristas and the consumer. So they've got a lot of heavy lifting ahead, but this seems to be the one executive that has experience in a lot of these areas. Yeah,
so the thing you got to remember about Wall Streeters, though, in regards to Wall Streeters judging these companies, they absolutely hold a lot of weight, right? What they say matters. because a lot of investors make decisions. But you also have to remember, a lot of these Wall Streeters have never run a business. They've never been in management. They've never done any of those things, right? And the reason being is it's not in their career path. These folks get out of high school, they go to college usually 4, 6, 8 years, right? And then they get hired in at entry-level, low-level analyst job or whatever it is on Wall Street, right? And they start kind of working their way up the ladder from there. And by the time they're in their 40s or 50s or 60s, they're at a pretty good position at whatever Wall Street institution they're at, right? So when it comes to judging management in terms of the details, you can't trust those people for that because they've never done it. They've never managed anything. They've never even run a business, so they wouldn't know how to judge that. But they do know how to judge if a guy's margins are going up over time, right? If the profitability is going up over time, if the revenues are going up, because those are all data points that are facts. They're not like opinion-based, right? And so, somebody that's a high-level operator can go into, like if I had Steve Wynn here, right? And Steve Wynn, and I took him around different resorts, he'd be able to go detail by detail on exactly all of the things those resorts are doing well, all the things they're not doing well, right? Because he's actually done that. These Wall Streeters, they've never done anything, right? So it's like, just don't put too much faith into any of the details around that. Basically, they're just going off of, well, he took the margins up at this company in the past, maybe he can do it again, those sorts of things, but they've never done this, right?